Max introduced me, he told you about how I was a Navy cryptologist or code breaker. I was stationed in Scotland. Like he said, I played hockey for the Aberdeen North Stars over there. My next duty station after that was in Norfolk, Virginia on the USS Theodore Roosevelt, CVN-71, Nimitz-class aircraft carrier, two nuclear reactors, whole bunch of cool stuff. And I'm so old, I was on the Roosevelt when they still had the Tomcat, the F-14. And then I got out of the Navy. A couple years later, they retired the Tomcat, and boy, did I feel old, and feel older every day. So this is our retirement decryption process, because I was a code breaker. There are 5 critical areas of your retirement planning that we need to have handled, or you need to have handled, really. And so there's the investment management there. We talked to a gentleman in our office today that he's got an advisor at Raymond James. Nothing against Raymond James, but he's had the same advisor 20 years, and all the advisor talks about is investments. Okay, and really we need more than just investments to get through retirement. There's also this tax planning area. What was interesting there, this gentleman and his wife, they had $800,000 saved in investment accounts, and it's all tax deferred. So rough rule of thumb, because if you have a tax deferred retirement account, this is a Slinky, if you remember this. This is another thing that makes me feel old, okay, Slinky. So say this gentleman and his wife had $800,000 tax deferred in IRA and 401k. What's crazy is this thing keeps growing, and then you get into your 70s, they make you take required minimum distributions, which are federally taxable. Then you take money out of your IRA or 401k to live on. Those distributions being federally taxable causes up to 85% of your Social Security to be federally taxable versus none of it being taxed. So a good rule of thumb for you, whatever your amount is in tax-deferred retirement accounts, like he had $800,000, it's going to create another $800,000 of federal income taxes over his lifetime, he and his wife's lifetime. It's a rough rule of thumb because it keeps growing and throwing off taxes. So a good rule of thumb is typically, and there's no guarantee on this, we have to run your numbers, but typically a good rule of thumb is if you come to us and you have $800,000 tax deferred, typically we can save you about half that amount in unnecessary federal income taxes. So $400,000 potentially could be saved for that family in that example from unnecessary federal income taxes. So that if we can find $400,000 in tax savings, we can put that back in the hopper, because $800,000 is a lot of money, and then it's not too, right? So if we can make it, instead of 800, they would have maybe 1.2 because of the tax savings. That helps get them through life.